Hey, what's going on, guys? I just wanted to do a quick video on Bitcoin here. You can see that we had this massive pump here that everybody's talking about. My count has really not changed. I, again, have this as an ABC correction. There is a little confusion going on now. Like I was saying in the last video, when we were kind of down here, I said there is a scenario where we will go up to the $3,800 area, and this gives us the ability. I was talking, we were down here, I said this count gives us the ability to go much higher to the $3,800 level. It also gives us the ability to come lower to some of these lower targets. Now, I had targets. The first target I had was like hit here, and then I had them laddered down to right about here. So I didn't take any position because I wanted to see this scenario play out, because I did have this channel. If you extend it far enough, you can call it a triangle, but either way, it's the same thing basically. So what I'm looking for now is this should be an ABC corrective three-wave structure to bring us to the top of this trend line, this channel here, which I have outlined in purple. And once we get there, we should roll over and try and retest the bottom of the trend line of the channel. Depending on how long that takes is going to depend on what price that is. But we should know within these subwaves down here, pretty much where we're going. But as of now, it's 3280 to, I really don't see us breaking this 236, this negative 236, which is a big algorithm target. It's a big bot algo software, trading software target. This is what these bots are programmed to cover. They'll cover their shorts here. And the nice thing about where this is we are not putting in a new low. Barely are we not putting in a new low. And where I pulled this fib level from was the top of the B to where I have the proposed C down here, which is the last swing high to swing low, which, very interestingly, the other algorithm play is always in this golden zone, the 618 to the 65. Even though 65 is not a Fibonacci number, it is a strong area to where these bots will close their longs, and they will also short this area here. So interestingly, these two targets like perfectly coincide with this count. So the bots have two targets here. The algos have two targets in play, which is between 38.15 on Bitstamp and 38.41 on Bitstamp. And then their lower target is about 31.35, we'll call it. So this looks really good because for these the algos always make money, and their targets are more often than not reached. So we're kind of sitting in the middle of this range here. We've been chopping through this 200-hour moving average over and over again, which to me, that shows that this moving average is going to be less significant as a support now, because we've just chop, up, down, up, down, up, down. We've just been chopping in and out of it. We did break it on this, this pump here, but I really don't know what the consensus is right now. I haven't talked to many people in the past couple of days, but I'm assuming that the entire world is now bullish because of this pump here. But this pump, in my opinion, is actually very bearish, because, you know, it just, I mean, I would say short term it's bearish, because we should come up here and we should roll over. Now, you know, nothing says that we have to do that. We could continue up, but the probability of that, to me, is less than 10% probability that we're going to go any higher than 38.42 on Bitstamp, before rolling back over and pushing up higher. This is my main count here, this ABC correction into this 4, before we start coming back down for the last leg down, or the proposed last leg. Hopefully it's the last leg, but you know, there's you know, we're not there yet, so you know, we're going to need to reevaluate what happens up here and what happens here and here before we can really start to put our finger on you know, when is this bear cycle, or when is this bear market going to end. So as of right now, this low here, I would give it, again, less. This low here is less than a 10% chance that this is going to be the bottom of this bear market. That's based on several indicators, several forms of technical analysis, which I'm not going to get into right now, because as of right now, it doesn't really matter. If you're a trader, and even if you're a swing trader, it doesn't matter. You know, if this low is broken, you deal with that, you know, when it happens. But as of now, this is my main count here. You know, what I'm going to look for is a retracement back down to probably the 3450 area, 3500 area, before another push up. Should be another 5 waves up to give us our A, B, C into our D wave before we come down for our E wave. And that should complete the A. This should complete this super long B. This B has taken, I mean, if it goes into February 25th, you know, this is 3 months, this wave here. And this wave is extremely complex. Some of these, I don't have the subwaves on here, but just extremely complex. So now I want to take you to my other scenario really quickly, which I have on Coinbase. And this count here, I'm seeing a lot of this on YouTube. This triangle here, and it is definitely valid. My problem with this count, my main problem with this count is that in order for this count to be correct, you would have to have the 3 wave ending here. And I do not like that for a couple of reasons. The main reason is because, I'm just going to take this timeline off real quick, but the main reason I do not like this count is, if you look at this 1, 2, and everyone has this as a triangle up here at this 6,000 area, which it very well may be, but I actually see this as 1, 2, 1, 2, 1. This 1, 2, 1, 2, 1, 2. I mean, it plays much better, in my opinion, as you know, this prolonged 1, 2, 3, 4, 5 motive wave down. But I just want to point out to you guys why I do not like this count. And hold on, let's go the other way here. I'm going to go from the bottom of the 1 here. Okay. Let's get this right on here. It's kind of a pain when you have all this stuff up here, but all right, I'll get this. This is, okay, I just really want to get this right on right to the tick. Okay, here we go. This is the length of my proposed one here, which was in like the middle of July 18th, when everybody was super bullish. We hit 8,500 or something like that. And I want to bring this down to my proposed 2, the top of the 2. Okay. Look where this, in other words, my main count, which is the count with the parallel channel, what has this 3 here. And if you look at, this is the high probability zone. I mean, like 80% of the time, wave 3's ends between the 1618 of the 1 and the 175 of the 1. And look at where this ends, right smack in the middle of the 1618 and the 175. I mean, to me, it's just technically this down here makes a lot more sense for this 3 to be over here, which if that 3 is over, this triangle is invalid, because you can only have a triangle in wave 4, wave B, wave X. So it doesn't play. It doesn't play, aside from the fact that it is, you know, pretty. It's not typical of a triangle to take this shape like this. So I don't understand why so many people have this count here like this, because to me, it's, you know, the probability of this is much less than the other count. But anyways, the reason I bring this count up is because this is basically the opposite of our triangle, and we're going to put in our E somewhere up here, somewhere in this area, which is the same area as our parallel channel, except the difference is once we hit this high up here, we're going to roll over and come way down to, you know, probably around the $2,100 area. But you know, the other thing is that if you forget about Elliott wave, if you just look at this, this is a bear flag. It's a symmetrical triangle, which is typically a continuation pattern of the bigger trend, which is clearly bearish. And if you were to just if you're just looking at this as a triangle, that's about the length of it. And if we bring it down to, yeah, I mean, we're looking at, yeah, right around the $2,100 area. So that does work. That does play. The other thing that I'd like to show you guys really quickly is we really don't have any support. Every single ascending trend line is broken. Every single one of them. You could see, I mean, if you wanted to draw it here, this was clearly a high volume pivot, but if you want to just, you know, I mean, they're all broken, every single one of them. We have 1 or 2 left, I believe. And when I say ascending support, I'm talking about Bitcoin's, you know, Bitcoin's soul. We're talking about, you know, a massive, the major cycle here. We're not talking about, you know, these little 1 day, 1 week, you know, trend lines. We're talking about years of supports that have been broken. So, you know, a lot of people are looking at the end of this year or the middle of this year for a reversal and the bear market to end, blah, blah, blah. My only problem with that is that we've had 10 years of bullishness. And, you know, if you guys watch my last video, which is the Bitcoin macro sample, I suggest you guys watch that video because there's a lot of good content on the macro level, and you would kind of understand more of specifically what I'm talking about right now. But you know, a lot of people are comparing, well, we've gone down this much percent. The last time we went down this much percent. It's not the same thing, because this bullish run was much steeper, much faster, much more intense. More media was involved, more new money was involved. And so it's just different. And to me, this bear market should take longer than the previous ones. So you know, and price and time and all that stuff. But I don't expect this, you know, this bear market to end sooner than the other ones did, because this one was, you know, had much more media attention, much more new money. And the problem with that is that when new money comes in, you know, if new money's coming in here, coming in here, coming in here, coming in here, they're all now bag holding. They're all holding loss. So anytime you have a market where so many people are holding loss, there's just going to be so much resistance and so much selling pressure on the way up and to try to reverse. So in my opinion, we need to see, and I've done this a couple of times before, but we need to see this on the volume. This is the kind of capitulation that I'm really looking for. You know, something similar, if not even bigger than this. Because in my opinion, we haven't had capitulation. We've had little runs of capitulation, but this is what I personally need to see before I'm ready to say that this bear market is over. So, you know, I'm not going to go too far into that, but that's what I'm looking for. And yes, everybody says, oh, we had capitulation here. Yes, we did. We did have capitulation here. Do you know what the problem with that is? Is that look how much time we spent sitting here, and there's just, to me, the drop doesn't match the you know, the time that was spent here. So anyways, that's neither here nor there. That's just kind of what I wanted to do. I wanted to give you guys a quick update here. This is the triangle count that I see so many people have, which I don't expect this to play out, to be honest with you, but hey, it could, you know, it could. So it's just something to be aware of. Something, you know, one of the main things is we always want to be prepared for everything. So this is the count that I deem more probable here, going up for the D, down for the E, blast off for the C. So, you know, we'll see. That's all I have for you guys as of right now. And I might do some altcoins later or something like that. But if you like the content, like, subscribe, hit the little bell, and I'll talk to you guys later. Thanks.